Well, some people in South Africa are still at the office. Stu, myself, and Ruan amongst them. I mean, how crazy is this? In other parts of the world, they try to have public holidays on a Monday, maybe once a month, and make sure that apart from Easter, that you don't have a Monday and a Friday. But we don't play like that. We have a Monday and a Friday in the same week, just after we had a Monday and a Friday. And you wonder why business struggles in South Africa. Oy. Hey, Sean, good to have you here with us. And also, as always, Stuart, Lowman, and Ruan Erasmus, making sure that everything goes as smoothly as it possibly can. All right, Stu, do you want to give us an update on exactly how all the tech works?
Excellent. Thanks, Alec. Always good to be here. Those new to the webinar, there is a little half five. It's called Raise. If you can give us a half five, if you can hear my voice coming through loud and clear and see Alec and myself on screen, we see some of those. We also like to keep it very conversational. Oh, there we go. Alec got some thumbs up. There we go. Brilliant. Thank you. We keep it conversational. Alec's got a little presentation he runs through, and then it's all over to the tribe for their Q&A. There's a little Q&A button on the bottom of that slide of the screen as well. If you can please put your questions in there, I'll pass them on to Alec. But Alec, it looks like plenty high fives. Sounds going through loud and clear, so we're good to go.
Oh, that's great. And I also see on our WhatsApp channel, Chris de Vos, or maybe he just sent it to me, says he's battling to get through. So perhaps, Ruan, if you wouldn't mind getting hold of Chris. He says he's battling to find oh, no, he sent it to me directly. So, Ruan, you know what I'm going to do? I'm going to share his contact details with you. And then if you don't mind, just seeing if you can help him through. Ruan's an absolute whiz at that. Okay, so let's go through. And you know what I've done today? I have actually got a presentation, but this is a pretty zooty one. And then we're gonna have the presentation for about 20 minutes, and then we'll do our trade, our transaction in putting another chunk of money into the Ricardo ZAR portfolio, South Africa portfolio, and of course tonight putting it into the US dollar portfolio. And what's lovely about these portfolios is that we are putting real money into it. So it's our money as well. It's BizNews' money as well. It's not just the theoretical, this is what we did. And then you kind of forget that there are things in between, like trading costs, converting from rands into dollars, and dividends that do come in on the other side. This is real money, and it's a real portfolio, and it's really with easy equities. We have both of them, both the ZAR and the US dollar portfolios. Let me tell you very quickly how it works. A very good friend of mine, whose name is Ricardo, said to me a while ago, towards the middle of last year, he said, I battle to even start investing in equities. So would you help me? Would you give me some advice? I said, Ricardo, I'd love to, but I don't really have time to be your financial advisor. Not that was his intention or mine. But what we'll do is we'll start a portfolio for people just like you, and we will take advantage of two big things, which is the first one is diversification. In other words, you won't just buy one share, you'll buy a number of them. And secondly, but focused diversification. So up to a dozen shares individually. So you've got a real interest in those companies and getting to know those companies. And secondly, we will apply rand cost averaging. So every month you'll buy another amount. So if you think that you've got 1,000 rand that you can invest in the portfolio, well, you put 1,000 rand through easy equities. They take care of all the fractionalization. And in other words, that full 1,000 rand after costs goes into co-ownership of the companies that we look at. And then we share with you the names of those companies and the developments and the updates on those companies in this monthly webinar. Of course, it's for BizNews Premium members only. So it's another part of your benefit of being a member of our tribe, or a paying member of our tribe. We've got lots and lots of members of our tribe, but the premium members they're the exclusive guys, especially the ones who come along to the conferences. And by the way, if you aren't yet aware of it, because we have kept it kind of under wraps, we do have another conference now, an investment conference from August the 11th to the 13th. Got some interesting things going on there, but I'll let you know more about that in a while. Let's get on to the presentation, starting off with the Ricardo US dollar portfolio. And here, harnessing artificial intelligence is a little subhead there, and that's really what it's all about. We believe, as does Elon Musk and many smart people, that AI is going to transform the world. I'm in a very unique position in having been exposed to the internet revolution at a time when everybody thought it was a fad. And I see so many parallels between what happened then with what's happening now. Of course, a very different situation for us. Back then, I didn't really know how all of these things worked, and started this company, and then we listed the company on the stock market, and well, it was called MoneyWeb, and the rest is history. MoneyWeb did very well, and then, well, it didn't. But we are now hoping that all of those lessons learnt will be applied in BizNews, which, would you believe, is coming up for 13 years old in August. So we've been around a while here at BizNews, and to take advantage now of the opportunities that are availing themselves through artificial intelligence, or the AI revolution. Starting off with the highlights of the portfolio, it's up 3.9%, the US dollar portfolio. So it's doing very well if you consider all of the ructions that are going on around the world at the moment. Pretty much focused on AI alpha, and not putting everything into one bucket, as it were. But here is the portfolio. You can have a look there and see ASML, Google, Amazon, Teledyne, Chubb, and Meta Platforms are in the green, and then Berkshire, Uber, Bitcoin, Palantir, and Tesla. Now, we knew about Palantir and Tesla. We did say to you, this is where Rand cost averaging is going to work out. Tesla's results that came through, I was very happy with, and I'll give you a little bit more insight into that in a moment. Palantir had just got ridiculous. It had ballooned. You might remember that we originally bought Palantir at $8 a share, and it's now sitting at $143 after having quite a fabulous run to over $200 a share. So it was tempting not to be invested in Palantir at all, given the huge surge that it had. But it's such a great company. It's got such a great positioning that we didn't want to miss out on that in the long term, and especially with Rand cost averaging. While the share price is excessive, you buy less of the equity, whereas when the share price falls, as it has been doing on Palantir, you're buying progressively more of the equity. So let's move on to the news that came through this time around. ASML is a heavyweight producer. It really is a stock that we want to be able to focus on in the long term. It's one of those rarities in the modern world where it's actually a monopolist. It makes these machines, and I've got a lovely picture there for you to have a look at. These machines that it makes are then sold on, and this is hundreds of millions of dollars for that machine, and then they are used to produce semiconductors. So the clients of ASML are companies like TSMC, which is in Taiwan, the biggest maker of chips. And ASML is not American. It's not Asian. It's beautifully in the middle. Something that South Africa can learn a lot from is the way that the Netherlands play it. And the Netherlands, it's where ASML is based, is very neutral. It's part of the EU, of course, but it plays the trade game in an extremely neutral manner. And ASML, being the company that it is now very, very well positioned to go forward in a way that it's got a lockhold. And you read the book Chip Wars, and you will see why or how it established that lockhold. And it's over decades of investment, and the Chinese haven't even got close to getting into this area. So ASML is our one, and it's been the best portfolio member thus far. Also doing very well that's what it looks like in the cloud. Those engines where they have it's not really the cloud. It's on Earth, of course, but this is where a lot of data is now being stored, rather than in the olden days when you had it on your own computer, on your hard drive. This is the modern hard drive. The modern hard drive, as we all know, because internet connectivity has now graduated to ubiquitous status, we can now put and be comfortable in putting our information onto a cloud, into the cloud, which is these kind of computer hardware situations. Alphabet and Amazon, two companies that continue to do very, very well through their cloud operations. Amazon being a company that most investors think of as a retailer, an online retailer, when in fact it's actually generating the most of its profit from AWS, which is Amazon Web Services. So they continue to serve us well. Alphabet and Amazon also very well positioned for the artificial intelligence revolution. And then we saw results coming out. By the way, Amazon and Alphabet, I think both of them deliver their results this week on Wednesday, tomorrow. So tomorrow night their time. So check out BizNews on Thursday morning. What I've been doing is looking at the quarterlies this time around for the first time from our portfolio constituents, and then I take those results and then produce a boardroom talk, which you can listen to at your leisure. So it'll bring you up to date on how the quarterlies have gone for those companies, and there've been a couple of boardroom talks on that now. It's essentially where I talk you through what the results were and what it means for us here in South Africa. Teledyne was one of those quarterlies. And I've put a picture there of the man that Warren Buffett rates as the best CEO ever. Yeah, kid you not. There's a book called The Outsiders, written by William Thorndike, in which he focuses on 8 of these CEOs. And the intro, or the preface, focuses on this gent, Henry Earl Singleton, an absolute superstar genius, but somebody who aligns with what Jim Collins wrote about in Good to Great, a low-profile entrepreneur. Just try to stay under the radar as much as he could. But he's the man who invented share buybacks, which is a very logical, rational thing. If your share price is trading at a massive discount to the value of your company, well, the best investment you can make is buy back your shares. And Teledyne did this before anybody else was even thinking of it. Through decades, they delivered fantastic performance while Singleton was in the chair. He died in the last century. So this is a long time ago. But why Teledyne? Because they retain that culture. And a lot of what Teledyne has done is a little bit like what ASML has done. For the clients of ASML, there is no alternative. You've got to go to the Netherlands and you've got to go and buy these machines that they produce. And there's no one's even getting close to challenging ASML in that spot. Teledyne is a similar company, but it does it with electronics. So you'll find in drones, for instance, there is stuff that Teledyne makes and only Teledyne makes, which anybody who's involved in drones has to buy. And in many other areas, it's in a similar situation. So these are guys who are really smart, low profile, a quiet compounder, as it has been described. And once again, it delivered quarterly growth for the first quarter here of over 20%, and that is exponentiality. So a wonderful company. Doesn't matter if nobody's ever heard of it, as long as you've heard of it, because we've got it in our portfolio. And it's just a quiet improver. Remember, this is since September. It's a 16% improvement. That is good news. On to the underperformers, and Tesla produced its first quarter results. I listened to Elon Musk's quarterly discussion with shareholders. They have what they call earnings calls. I don't get to listen to all of them, but Elon being Elon, I wanted to hear this one. And man, does this guy impress me. I know that a genius like Cy Jacobs says it's the best short on Wall Street. I just disagree. I disagree so strongly with him. Elon is looking ahead in a way that most mere mortals do not have that ability. When you research how Elon Musk thinks and how it is that he has created completely new paradigms for the space industry, for the electric car industry, for things like AI. He was the original guy, or one of the original guys who put together ChatGPT. And interestingly enough, the other AI operation is from Google, Gemini. Now, Gemini preceded ChatGPT. Almost certainly, Elon saw what Gemini were doing, or the DeepMind was doing, and then replicated it some years later. So in the same way as Amazon had a huge advantage when it comes to the cloud, because what Jeff Bezos did on the cloud, the big bets he had in the cloud were at least 5 years ahead of everybody else. Amazon did that on YouTube, which they bought, but they noticed, Google did that, or Alphabet rather, did that on YouTube. They bought from Hurley & Co., the YouTube operation, long before anybody thought that video was going to be available in the way that it is today. And YouTube is just massive. There's more, people watch more YouTube than everything else combined. Seriously. It is now the new video giant. And it's also done the same with AI. Demis Hassabis and his team at DeepMind were going along quite well, in the same way as Sean Hurley and his team at YouTube were going along. And Amazon, Alphabet came along, Google came along and bought DeepMind, and it's now, of course, called Gemini, being rebranded into Gemini. And that is the market leader in the same way as YouTube is a market leader there. Although this time round, you do have quite a few other competitors. ChatGPT is one, Elon's Grok is another, and of course Anthropic has been very exciting what they're busy doing as well. But I'm still a big believer. I've tested them all in Gemini, and it makes sense because Gemini was just first to the market there. Now, why I'm mentioning all of this is because Elon Musk is way ahead on robotics. And he reckons that robots, personal robots, are going to be the biggest product ever. And he has got in his factories the ability to produce 1 million by the end of this year, and in future, many millions of these robots. Now, you got to wonder, and he's pivoting towards it. He's talking about investing $25 billion in these factories, in robots, not electric cars, not in software, not even in robo-taxis, which are going great guns. They are now, have been operating in Texas, in a couple of cities there, very efficiently. You can get a robo-taxi. In other words, a taxi, you call, and taxi comes, arrives, you get in, off it takes you to, with no driver, it takes you to the destination. This is science fiction for us here in South Africa, where we do have other taxis who are quite aggressive. There, it's science fact. And Elon's, that's so far advanced, and it's kind of running now. Now Elon is saying, robots, that's the next thing. And he's Optimus is the, Optima is the name of the robots, and they are way ahead on that scale as well. The Chinese have been quite good, and you see quite a lot of Chinese videos around the place on TikTok and so on. But when it comes to producing at scale, nobody will compete with Tesla. But investors are looking at Tesla and saying, what's happening with your electric cars? And so they're valuing them as an electric car maker, not about the future. And the future is this huge pivot towards robotics. Now, Elon could be wrong. He could very well be wrong. He wasn't wrong about space. He wasn't wrong about electric vehicles. He wasn't wrong about AI, but he could be wrong about robotics. And that is the risk that you have here. But if he's right, he wasn't wrong about driverless cars either, or driverless taxis. But if he is right on robotics, and he's got a pretty good track record, then what we're seeing at Tesla at the moment is certainly not the best short in the market. That's my view, but that's what makes a market. And I always hesitate to take a contrary view to the great Cy Jacobs, but in this one I am. And then Bitcoin, well, and somebody else who knows Bitcoin very well is Stafford Marcy. He's really just so far ahead of the game as far as South Africans are concerned on both AI and on crypto. And he's in fact going to be at that conference. He's going to be talking at the conference on AI, artificial intelligence. That's in the Drakensberg in August. You can get more details of the structure as it is at the moment. I've got some exciting additions to it. I won't leave them here. This is not the forum. But if you go onto the BizNews website, you'll see at the top there is an image. Click on the image and you can book your space and do it. As a premium member, really get yourself into the hotel. Get yourself into Champagne Sports Resort, because it's just a much better experience when you're living on the premises. It doesn't mean that you can't stay in B&Bs and other hotels in the area. That's just fine. And we are going to make it a all-embracing experience, but it's just so much nicer when you're in the hotel. So, and there's a limited number of rooms. So if you want to come to the conference in the Berg, our investment conference, please just get moving now as a premium member. This is an inside track for you. But I'm quite happy with what's going on with Bitcoin. Do remember, there's a little bit of background to this. We put 2% of the portfolio into Bitcoin sometime back when it was still a shift portfolio, when we still had that. Remember, it wasn't a Rand cost averaging portfolio, because shift, I'm sure they're going to bring that in someday because they've got a fantastic platform, but they don't have that fractionalization. That's why the Ricardo portfolios are with easy equities. But we went from 2% to 10% at one stage. That's how well Bitcoin outperformed. Long term, Bitcoin is it's got many, many supporters, and it just makes a lot of sense. Okay, so that's the US portfolio. We're not selling Tesla. We're not selling the Bitcoin ETF. Onto the Rand portfolio. And here, South Africa is struggling. Our country is struggling. You look at our economic growth rate, and it's now the Iran war. Everybody's saying, well, not everybody, but the Reserve Bank governor saying, we were doing well until the Iran war came along. We know what higher petrol and diesel prices do to our country and do to us and do to the economy. We're a big country. We rely on very inefficient Transnet. I mean, it's just such a shame what Transnet has done to this country, and indeed Eskom as well. And that you have a government that owns these things or has that dead hand on it. And the cost of doing business that those two have added to our country is just scary. Ideology on top of that. But anyway, that's again a subject for another day. But what I can tell you is that when the fuel prices go up, because lots of people need diesel to get the electricity stabilized. You need a lot of diesel to do the transportation around the country. A lot of the goods and services, not services, but the goods get transported in this country because Transnet is inefficient. And as a consequence of that, it's a direct cost, what's going on in Iran right now. But the portfolio has held up well. It's only down 3%. And when you start looking at the costs that you take in trading and so on, it's reasonable. I'm quite comfortable with where we are now. And if you consider the jolts that we've been through, and yet we're hanging in there. And interestingly enough, the worst performer is Process. Now, that's a strange one, because Process is, well, part of the old Naspers, the offshore version. It owns a big chunk. It's around 30% now of Tencent, and it trades at a massive discount to that underlying value of Tencent. So they continue to buy back their own shares, like Singleton would have advised. And as a consequence of that, you do know that our shares, our value there is down 19.5%. But at least you know that the company's got lots of cash and it's just buying back its own shares. Not doing it, it's doing it in a disciplined manner. It's not jumping in and buying them all at one shot. But it is a a turnaround just waiting to happen. I really like the new CEO of Process as well. And Process got a good return on its sale of Delivery Hero, the operation in Germany, which it was very grumpy about having to sell. But it had bought Just Eat in the UK, the Netherlands operation. So We Buy Cars down 16.5%, Afrimat 18.3%. Those are two very nice turnaround situations. We Buy Cars, interesting to see this month that you're getting a lot more institutional interest. So the institutions are looking at this. I guess those who missed out at the listing, 18 to 20 Rand a share, unlike Walter Aylett, who filled his boots then, they're now looking at the current price, 39 Rand, and saying, great value here long term. And they are stocking up. We just continuing to buy every month in those two. Pick n Pay has improved quite well in the past month. Remember, there you've also got the underlying value. There it's in Boxer. So what you're paying for Pick n Pay today, you're getting it for free, getting the whole of Pick n Pay brand for free. And Sean Summers from Pick n Pay will also be at the investment conference. So he'll come and give us some insights, as is Andres van Heerden from Afrimat. So you see, it kind of all works together. And there's Purple Group, which is down 12%. Now, this does surprise me because they had excellent financial results in the past month. It's showing that it's starting to come home. The bacon's starting to come home. And if you stop and think about that and really analyze it and do a bit of homework, you'll realize why Purple Group at these levels is just fabulous value. And we will have the CEO of Purple in the Drakensberg. That's Charles Savage, and HCI's CEO, Johnny Copeland. Very low profile. The chief executive or executive chairman there, one of the smart, Piet Viljoen says, one of the smartest business people in the country. He too will be in the Drakensberg. So you've got to book your tickets if you're invested in the Ricardo portfolio, because these are you'll be getting it from the horse's mouth there. But HCI has done well. Orion is still our best performer. Just to talk about Orion, that picture comes from a press release that was sent to us by BHP, and BHP is supporting Orion in the exploration for more copper and other minerals in the area where it's got this huge, massive lease area, mining lease area. So it got further de-risked by the IDC loan being converted into equity. That's in one part of the operation. And at 32 cents, institutions are starting to get in now. Peter Major says it's the best buy of all the mining stocks. But it's a lovely pick, isn't it? You can see there they've drilled a lot of holes, and now they're sending down the technology that actually works out what's there. So it's the highly sophisticated stuff that goes down the drill holes to make sure that it does things the right way. Best two performers outside of Orion, Sabvest Capital and HCI, are doing incredibly well, countering the JSE as a whole, which in the industrial side has been very sluggish. And We Buy Cars and Process, pretty comfortable with both of those. We Buy Cars starting to attract institutional interest. By the way, the We Buy Cars share price was under pressure because the founders, Faan and Dirk van der Walt, have diversified their own personal portfolios by investing in property, and did it very publicly as well by helping to put together the consortium that is acquiring the old, I think it's RMBH, which is now just holding some property stocks, but at a deep discount, and they're looking to buy that out and take it off the market. So that's done very publicly, and they sold, I think it was 500 million rand, but they still got over R1 billion rand plus invested in We Buy Cars. And so for them, they have no lack of confidence in what's going on at their own company. And it reminds me, before we move off it, of what Tsepo Malelwe, who is the guy who bought, he had 7% of Capitec at one point. He has taken that down to just under 4%. That's a huge transaction. It's like tens of billions of rands. But he said that and I spoke to him about it. He is a small shareholder in BizNews, and he said to me that this was to do with derivatives and the derivative structures that were involved with the Capitec investment that he had. And as a consequence of that, he also said, and issued a statement actually after our conversation, he also said that there was no lack of confidence in the Capitec executives. And Capitec also came out with financial results, which were phenomenal. But you got to wonder, I mean, Capitec, we're starting to believe it now, that everyone's starting to believe that they just come back every year, every set of results, and they just show you how much better and better they're getting. On to Charles Savage, who, as mentioned, will be in the Drakensberg with us. The Easy Equities headline earnings up 21%. That's exponential. If you start extrapolating that into the future, you'll see. And the lovely thing about this is that this comes after many years of hard work, and now they have the base in place, and it will just escalate from here. So it's another quiet compounder, actually, a little bit like Teledyne. And then the dynamics generally, you can see in the portfolio, we're doing very well out of AI infrastructure from the US. Strategic mining here, Orion, thank you. I think we will see benefits from Afrimat in time, although that's not purely a mining play. They also bought a cement factory in what's now called Ditsobotla, the most dysfunctional municipality in South Africa, and that's confirmed because they've had 2 elections. They're trying to get a new town council, and eventually, because they couldn't get a difference in the breakdown, people still voted despite the mess along their old football club lines, if you like, ANC and EFF and whoever. There weren't too many DA guys there. And then Sakelige took that situation and sued and threatened to sue the Minister of Finance and the President unless the central government stepped in, Treasury stepped in, and Treasury did step in at the last minute. Of course, just before they got to court on it. Anyway, it's South African strategic mining. We've got a good bet coming home with us with Orion, but also Afrimat, good turnaround. And then consumer retail's under pressure, and there you can see the impact on our portfolio. So that's it. Now it's time for Q&A, and over to you, Stuart.
Excellent. Thank you, Alec. Always good to listen. Sean just wants to know, how should we be thinking about SpaceX, Starlink, and XAI and the upcoming public listing and the impact potential on Tesla?
I think we're invested in Tesla. Let's just see how that all plays out. At some point in time, Elon may or may not, but probably may, consolidate all of his interests. Just makes sense. Tesla and SpaceX are talking about doing some interesting things. Then we've got doing interesting joint ventures. And then we've got Grok, which is the AI play of Twitter, which Elon also owns. And they are now looking, AI needs data centers. And SpaceX is looking to put data centers in space. Now, when SpaceX started, when Elon started with Starlink, he was regarded as a bit of a kook. There had been an effort to do the same thing in having satellites providing internet access into any part of the world, and that was a spectacular failure. The company that did that lost tens of billions of dollars, and yet Elon managed to get that one working. If he's saying that he'll be putting data centers into the sky, and if Twitter needs it and SpaceX needs it as well, or SpaceX can produce it, can provide it. Remember, SpaceX owns the rocket ships that can go into space and transport things into space. So it all kind of works, but you've got to get out of your linear kind of vision and have more of a lateral thinking. And it's very complicated and far too complicated for most of us. So we're invested in Tesla. Let's just go along for the ride on that one. At some point in time, SpaceX's developments have to enhance what's going on with Tesla. Elon's not going to forget about it. That's kind of his baby.
Thanks, Alec. I was going to say also, if you get SpaceX exposure through Google or Alphabet, sorry, it owns a 5 to 6% stake of SpaceX. And I think there's a lot of that in the mega caps. They've all got little chunks of companies all around, which is quite an interesting case.
Yeah, a little bit like the way that Tencent was doing in China. It made many investments, and eventually some of them, like SoftBank, will hopefully for them come to fruition. I suppose that's the way you play it. Eh? You, like some private equity firms, that they invest a lot of money in many areas, and they expect only one or two of them to be superstar hitters. And SpaceX has clearly been one of those.
Michael just wants to know if you have a view on Micron Technologies.
No, you got me off sides there, Michael. Sorry, don't know it. Haven't done any research. So
Sean says, I know we were talking about We Buy Cars. He says, are there any investable Chinese automakers? They seem to be wiping the floor with legacy car makers in South Africa and I guess elsewhere globally.
Yeah. This is a very sensitive subject and a very, very sad subject. The Chinese allocate about 4% of GDP to subsidies for their industries. So the Chinese automakers get massive subsidies from the Chinese government in various ways, and they do it openly. There's a fight going on at the moment between the IMF, International Monetary Fund, and the Chinese government, where the IMF is saying, please cut that to 2% of GDP. So it's not a question of it, it's not happening. It is happening, and the IMF has said, well, just to be fair to the rest of the world, don't put so much into it. And of course, the Chinese are saying not a chance. So essentially what's happening there, and just in layman's terms, is that Chinese companies are being supported by their government. They're being subsidized to produce products which are then cheaper than can be produced elsewhere in the world where you don't have government subsidies. And as a consequence, they are taking market share and hollowing out manufacturing operations elsewhere. And of course, this is the beginning of protectionism. And that's why you see why the Trump phenomenon was as strong as it was, because it's all about people don't really know why. They battle to join the dots. But what they do know is, hey, I used to have a job at a steel mill, or Dad used to have a job there and it isn't there anymore. Or we used to manufacture this and actually we don't anymore. And so that's where the kickback has come to a large degree. But there is, since the Chinese went into the World Trade Organization, they got they played it brilliantly. When you have a look back on it, economic historians are going to say, what was the rest of the world thinking? Anyway, it is what it is. And right now you have Chinese automakers who are being subsidized to attack other markets. We in this country are also subsidizing our automakers. And who's subsidizing them? You and me. We pay a 30% duty on every vehicle that comes into this country. And most of the vehicles we buy are imported because our motor manufacturers do not produce. The whole idea of having them in this country initially was because we're so far away, why can't we produce our own cars? And then our public, the members of South African public, wouldn't have to pay these huge costs of bringing in something from overseas. Well, that really worked out into something it's morphed into something really crazy, where our motor manufacturers here produce a limited number of cars because they need scale, which they're selling elsewhere. But most of what we buy is not produced here. So it's a very complicated subject. Donald Mackay, who's our preeminent expert on international trade, has got some very strong feelings about it. Go and watch the delivery of his talk at BNC 8. It's on the BizNews YouTube channel. That'll give you a better understanding. But I hate buying into something that's subsidized. I think subsidies do not work in the long term. Of course, you can benefit in the short term. And maybe if you're clever enough to know when that benefit's going to switch off, then you can take advantage of it. But if you're a long-term investor, and remember our average time of purchase is forever. When we buy a stock, we want to hold it forever. Then you can't go into something that does not have an economic advantage or an advantage. What is an economic advantage? It is something that you're producing for your market, who are consumers, human beings, and other companies, at a better value than what is available in the marketplace. It's like any entrepreneur. You can't become an entrepreneur by getting handouts from government, although our government seems to think you can. That's not the way it works. You're an entrepreneur because you scan the market and you say, hey, these guys are making TVs far too expensively. I think I can find a way of doing it cheaper and better. And that's what an entrepreneur is, cheaper and better. And if you're getting subsidized to the degree that the Chinese are, at some point in time, those chickens are going to come home to roost. But right now, they're getting massive subsidies. They are way ahead of the game in many respects as a result of that. And our poor motor manufacturers here, who don't have the benefit of scale and indeed are also subsidized, are really having their backs against the wall. Of course, they don't believe that, and they give you all kinds of stories of why it's so important that we as the taxpayer give them this massive subsidy that we do. But I suppose if you're used to something, it's hard to get off life support.
Thank you, Alec. Anthony just wants to know if you have any thoughts on Intel.
Yeah, I like it. I was looking at Intel. I was looking at Texas Instruments. I've been following Texas Instruments as one of the stocks that we could be investing in. And the bloody thing's up 43% this year so far. I saw that the other day, and that's a little bit weak for us. I like Texas Instruments because they were one of the dominant players in semiconductors. And I won't say they lost their way, but the founder of TSMC actually worked at Texas Instruments, and he wanted to stay there, but he got overlooked for the top job. So off he went back to his native, to Taiwan. I don't think he even was Taiwanese. He was born in America. I stand under correction. He went to Taiwan and then started, the Taiwanese government actually recruited him. And then he started TSMC, which is now 40% of all semiconductors in the world are produced there. So it just shows Texas Instruments got this deep, deep intellectual base and knowledge. And it seems to be coming back into its own. Intel, on the other hand, is being subsidized by Trump. Yeah, remember? They bought a big chunk there. So Intel itself was a fantastic company. Also has a wonderful pedigree. And it also seems to be coming back into its own on the semiconductor side. So I don't know enough about Intel. I have been looking at Texas Instruments, and I've been very keen on that one. But semiconductors are the picks and shovels of the AI boom. And so I don't know how far wrong you can go by taking longer-term investment bet on a company like Intel or Texas Instruments or even TSMC, although TSMC's problem, of course, is it's in Taiwan. And who knows, with all this geopolitical saber rattling and real bombs that are going off, whether that's going to move east as well at some point in time. Some point in time, you got to believe that China and America, given the leadership they have, is going to find the need to take rhetoric into action. But for the moment, TSMC continues to be very, very important. I know they are building plants in the United States, which might be telling you something about the future. But Intel, I don't think you can go far wrong.
Like I see, Intel's up 303% since the US put some money in there.
And they're not dumb. The difference is it's not like our guys in Pretoria trying to find black industrialists and just waste 100 billion rand of our money. The chaps in America, the government there, they're business people. So they know a good bet when they can see it. And I don't know if you picked up, but Besant they made a huge profit on bailing out Argentina. Massive profit on supporting Argentina at the time that it needed support. So they saw it as a short-term problem, and they gave them credit lines and bought their bonds. And now they're able to offload, as they did the same thing they did after the global financial crisis. And there's a big difference between people who are in government who know nothing about business and people who are in government who've come from business. And so when you see the current American administration taking these kind of decisions, big decisions, you must know that they're seeing an obvious investment opportunity for the state and are benefiting from it. And Intel kind of supports that view.
Thank you, Alec. Derek just wants to know, what's your view on Apple going forward with the announcement of the new CEO?
Oh, I love it. Absolutely love it. We got a piece on BizNews today, which suggests that Tim Cook, interesting, Tim Cook has been CEO of Apple for longer than the founder was CEO of Apple. Isn't that interesting? Steve Jobs is now 1 year, served for 1 year less, and that was in both of his terms, than did Tim Cook. So Tim he's been a phenomenon, and you can be sure that the man that he's handing the baton over to, who's been at Apple for a long, long time, is the succession planning is really good, and they've got incredible strategy there. They just make good stuff. Apple actually is all about quality, and that's why it amazes me that people look for alternatives to what you can get in Apple, and you can get the ecosystem, and you can use the different products, and they integrate with each other. And that was Steve Jobs' whole philosophy, and it's been continued and expanded on by Tim Cook and the new guy who we ran a piece on. Sure, Bloomberg were tipping him, I think, 3 months ago, and everything that I read there was that he seems to be the ideal person. He's much younger. He's in his early 50s. So he's going to be there like Tim for some time. And he's been in a senior post for a long time, and he'll be taking over, I think, only next year sometime. So if you talk about succession planning, this is the way to do it.
Alec, Andrew just wants to know, he says, without doubt, AI will be disruptive, transformative, and will create massive opportunities. But which JSE shares would you now avoid due to such disruptions?
That's a tough question, Andrew. That's a tough question. I don't know. I haven't applied my mind to it. Sorry. But I think it's something that you really, really need to take into account when you get to know. My thinking on these things is use the tools more and more and more. And as you use the tools more, you get to see the obvious. And the obvious has got to be that the software makers, and we've seen that in America, there's always a panic. There's always an exaggeration in the short term. The impact is never as big in the short term as people expect it to be, but it's never as little as moderated in the long term as anticipated. I mean, seriously, look at the newspapers today in South Africa. They're being subsidized. There's no newspaper that I know that I can see, or magazine or print, that is actually making a profit. And a lot of them, it's just like weird that they're even still around. How the heck are they still surviving? But I can tell you, in the early days of the internet, I was being branded an absolute moron for throwing everything in, and for having the temerity to tell the JSE that already then more people were reading financial results online than reading them in newspapers. And I knew this because I was running a listed company, and we never got any feedback from anybody in the adverts that we had to put in, our financial adverts. We were forced to put into newspapers, talk about subsidies. Not a word from anyone. And it was huge money. Whereas we always got a lot of feedback from whatever we published online. So it's almost like one gets invested in a certain situation. And if you look at AI, it's going to have a similar impact on some industries that the internet had on print publishing. You just got to sit back and think and maybe reflect, and I'm sure you'll come to your own conclusions there.
Excellent, Alec. Sean asks, what are your thoughts on Anthropic? They seem to be out innovating other current AI players.
Wow, phenomenal. I mean, it's yeah. I'm an obvious fan. I don't know enough about them to be able to give you anything more than that. It's a complex world, and it's working. The world is going at 1,000 miles an hour, but it's Anthropic is something we all need to know, and Claude, we need to know more about it. All I can tell you is that when a government of a country is desperate to get the products that Anthropic has, and Anthropic are trying to backpedal and not let that government have it, and we're talking here about the United States, you've got to pay attention to that company, because it doesn't happen to many that you have a situation like that. So let's go and learn more about Anthropic, guys.
So a heavy AI theme today, Alec. Edmund was picking up on your thoughts on AI robotics being big growth markets for the future. What is your view on investing through the ARK funds, Kathy Wood, rather than trying to pick the winners? I leave it to her team.
Again, Kathy Wood was branded. I know a very respected asset manager here in South Africa told me in privately that he thought Kathy Wood needed to be locked up. And I couldn't believe it, but that's the position that he came from. To me, she's just so far ahead of the game. And I remember I first, in 2018, we had Tesla in our portfolio, and Elon Musk did some crazy things. I remember watching one of his earnings calls, and he was ignoring all the asset managers, and he gave a lot of time to some unknown and now departed 15-minute of fame blogger or YouTube chap. And I thought, no, Elon, you've really lost it. And that, together with the fights he was having with the SEC, is it's, for my little brain, it was too much. And so we sold. And I remember reading and hearing Kathy Wood's comments on that at the time. And she was just explaining things so much more clearly. And she said Tesla is the company, it was her biggest portfolio holding. And she was just so right when everybody else, pretty much everybody else, including me, were just so wrong. And she's been ahead of the game. She's got a big bunch of people who are specifically looking at revolutionary or disruptive technologies. That's their sweet spot. They spend every moment looking at that. And we spend, like at BizNews, we spend every moment thinking, how can we improve our service for our community? How can we serve our tribe better? What she does is she and her team look at what is the next disruptive technology. You're not going to get it right 100% of the time, but boy, are they far ahead of so many or most of the rest of the market. So I'm a big admirer, and I love reading her stuff, and I love listening to what Kathy has to say. And she's a trained economist. Remember, that's what her background is from. And is like me, she's got a deep faith, and I love that too in someone. So yeah, I'm a big fan.
Well, the jobs we work with the pirates, Alec, the ones not everyone likes at first, but
exactly. I've got that. I can't show you the poster, but it came from BNC 7 with that lovely quote of Steve Jobs's. Here's to the Here's to the misfits and the odd people, and the not the because they are the ones who change the world. And Kathy is plugged into that. She's plugged into those who change the world.
Thanks, Alec. We're almost at the top of the hour. I've got a question from Dear Vault. I've been looking at Jubilee Metals Group as a forever share. How well do you know the company? Have I lost my marbles, or is the opportunity there? Your thoughts?
Dear Vault, be careful. That's all I'm going to say to you. It was a favorite of Peter Major's, and I'm afraid Peter Major seems to have gone a bit off them. This after one of our tribe gave us a whole lot of information on Jubilee. I passed it through. I am hoping. I'm just restructuring not restructuring, but adding to the investment conference. I am hoping to get Jubilee to the investment conference. So hopefully we'll have some insight. We'll have them there, and then they can explain about it. But just hold off until then. Not yet. Now, I like what you like, which is copper, and copper is for the new age. That's the place to be. Zambia, H.H. Hishalima, he's, my goodness, if H.H. was running South Africa, our GDP would be running at 5 to 7% growth. I'll say that without any fear of contradiction. He just gets it. I mean, he gets it. The poor guy, I mean, he was thrown in jail so many times by the rogues and the thugs who ran it. At last, the Zambian population woke up and then elected him. And he has a brain which is plugged into the 21st century. And he knows what he's doing. And they go into a geography where he operates. But Peter's a bit, and Pete was very supportive, but he's a bit nervous now. So let's just wait and hear a bit more from the company themselves. He just feels that they're always changing things, and they're not, it's always a promise, and we don't know if that promise ends. Stu, I think that's it for us for today. I know there might still be more questions, but I've got to be online somewhere else at 1:00. It's like a minute's time, so I'm sure I'll be forgiven for that. But thank you again, Stu. Thanks, Ruan, for making this smooth. But most of all, thanks to the community. Thanks to the tribe for coming along. Look forward to seeing you at the investment conference. Go and book your tickets now so that we can actually stay in the same hotel. And then, of course, we'll be back again the last Tuesday of next month at noon. Until then, cheers.